Stock of the week, Netflix. Now, this is a new thing that I'm doing where I will focus on a stock in the news. I might do more than one a week. Netflix is in the news because of the Warner Brothers deal. Let's have a look at what all of this means, what it looks like. Now, there's several things which are impressive about Netflix. First of all, the 2,000% rise over the last 10 years. Even more so, the 500% rise over the last 3.5 years. You might even say peak to peak is up 50% since the last 4 years. Not as impressive. That's a pretty poor performance, because if you miss this drop, you were in trouble. You not only got only a 50% rise over 4 years, but you had a 75% drop in value. What does that tell us about Netflix? Well, of course, there is some degree of volatility when it has a pattern where the short and medium term prices fall steeply. It doesn't always happen, but that trapdoor can be deep. It's in that similar position now. Now, what we know is when it happened last time, it was a deep fall, 75%. You really got shafted on that one. But the preceding times, once, twice, there was nothing. It was a quick whipsaw up 3 times. So what do? Well, when it's falling like this, you probably proceed with caution, buy, sell, or hold. Let's have a look at some more of the data of what you might do. The great thing about Netflix is it is a classic buy the dip over the last 2 years. The problem is the trapdoor of 2022. You can see how its return histograms are very tight. In other words, if it drops 15-16%, it always made sense to buy that dip. Obviously, if it only dropped under 10%, it didn't, because you'd be overexposed. You'd end up buying every single little downward move. So once you've got your initial position, maybe you edge in slowly. It's not one I hold. It's not one I plan to hold. I'm busy with other holdings. But once you've got your initial holding and you're edging in, then you're buying on dips is one strategy. Alternatively, if you're fully invested in it and the opportunity arises, if it drops 15-20%, certainly, you might want to buy more. The only caveat to that being, if you've got short and medium term prices falling, you might want to wait until at least they level out, just in case you're buying on a 15% drop before it drops like a stone. Let's look at some more analysis of this one. Look, forecast set to grow on earnings. That's good. The analysts are largely in agreement. It looks like a healthy company, well valued, no obvious problems and risks. The thing I always like looking at is discount cash flow. A little bit overvalued. Discount cash flow is not the most reliable measure of valuation. However, it gives us some pause for thought that were it to drop lower, it would certainly help take some of those concerns off the table. And that's why buying cheaper on a 15-20% drop would be a safer bet. Subject to, as I said, those short and medium term prices falling, because if they fall, the problem you've got, if they continue falling, the problem you've got is that you could be in for a steeper fall all in all. Who are the competitors? Walt Disney, Spotify, Warner Brothers. It's taken a large chunk out of Warner Brothers. No wonder, because Warner Brothers is in financial trouble. Life Nation, another competitor. Okay, fine. We've got some broad themes there. So why am I not interested? Well, like I said, I'm fully invested elsewhere is one reason. Been a great company, don't get me wrong, over the last 5 years, going from $17 all the way to $100. In the near term, it looks like people aren't getting overly excited about it acquiring Warner Brothers, some of Warner Brothers streaming business and other business units. Is that good, bad? You can't really read too much into it. It could be that the downdraft has already been in place. But what it tells me is that this is a company which looks like it's going to be the winner. You know, the question is it going to be Warner Brothers? Is it going to be Disney? Is it going to be Paramount? Is it going to be Apple? There's just too many units out there. Now, Apple's got deep pockets, but Apple has also got focus. Okay, its core business is not making content for TV. And so what you're left with is the competitors who've got deep enough pockets to bankrupt anybody. Well, they're probably not going to use that kind of money to go against Netflix. Then you've got the ones who don't have the deep pockets, like a Paramount or a Disney, got great brands, but Netflix can outpurchase them, as it were, certainly given the amount of capital it's got. It's almost like an NVIDIA in its space. And you might say, well, thanks very much. Why didn't you tell us that on October the 31st, 2022? Well, it's been hard to believe that it's such a great play. So like I said, whilst it's not one for me because I'm adequately invested elsewhere, thank you very much. It has fallen below this bottom trend channel, and I'd keep an eye on this. I certainly wouldn't want to enter until I see this green line, the medium-term average price, starting to edge and move higher. Okay, and that will almost certainly mean this price gets a bit closer to about 120. You might say, well, why wouldn't you buy it at 100 instead of 120? Well, like I said, for me, I'm more risk averse with this. I don't want to see this kind of a fall and be holding on to it, because then you end up over 4 years with just a 50% return. Okay, so that's why I don't like to get into the hole to begin with. Hopefully that gives you some insights. If you've liked this, I have a request. This is a new thing I'm doing, where I'm doing stock of the week and trying to educate people on the kinds of things we look for in broad summary. Because it's new, I want to try and get 3,000 views per video. If I get 3,000 views, I'll continue doing them. The best way you can help me is I'll continue doing these completely for free. If you, and it won't cost you anything, hit the like, the share, the subscribe buttons. Because if you do, then the algorithms of YouTube and TikTok send it to a bigger audience. If they send it to a bigger audience, I know I'm not speaking to an empty room. I continue doing these, costs you nothing. I think it's a fair swap. I'll spend a bit of time doing these. You just click a button and go, I'll save this. In fact, if you do all of those things, comment, save, like, repost, forward to a friend, repost on Twitter, that's a biggie. If you repost on other social media channels, all of those things help viewership and getting things to a bigger audience. So I just want to say thank you for all of that. And if you'd like free resources on investing and learning how to invest better, there's a ton of free resources that I've created at alpeshpatel.com/links. So that's it from me for now. Like I said, I hope you've liked it. I know you're going to send me some stocks. I've already had Oracle sent my way. There'll be a few others, the analysis of which you will want. There are more stocks than there are days in the week, but I will try my best, especially if it's, like I say, a stock in the news, which I'll call stock of the week. Thank you all very much, and I'll see you next time.